This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. Today is edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. We're glad you're here on today for our program for today. I am Cesar Delgado. I am your host of today's program. We were talking about the commodities markets and counting on the cattle markets with Brady Hawk from Advanced Trading. The Markets Club podcast is coming out for tomorrow morning for the livestock with Dr. Anderson from Texas A&M and Josh Leanville from StoneX. Kurt Kimmel from agmarkets.net. You don't miss it. Otherwise, this is your rural news sponsored by AgriGold. We are watching the planting intention report on next Monday because of the corn acreage for this spring. Beans acreage for this spring are down for this year. In Missouri and Illinois, Arkansas, we're hitting some storms and tornadoes in southern Missouri. Finally, the food prices are high with inflation rate. Food prices are more expensive than expected to 28 cents per capita to people with low income for food. This been your rural news for this afternoon. This is your commodities markets for this afternoon, sponsored by Kyle Bumstead from Allendale Incorporated. Corn futures is mixed for today. May corn is down at 3 to 4 cents. July corn is up at 5 to 10 cents. December corn is up at 5 to 10 cents. April beans are up at 5 to 10 cents. July beans are up at 3 to 6 cents. August beans are down at 4 to 6 cents. Chicago May wheat is up at 3 to 6 cents. Chicago July wheat is up to 5 to 10 cents. Chicago September wheat is up at 9 to 4 cents. Let's see what happens to the livestock markets for this afternoon. April cattle is up at 9 to 4 cents. June cattle is up at 4 to 5 cents. August cattle is up at 3 to 6 cents. May feeder cattle is up at 5 to 8 cents on the day. July feeder cattle is up at 4 to 6 cents. April hogs is up at 5 to 10 cents. June hogs is up at 3 to 6 cents. Cash cattle is steady as today. Cash cattle weights is up at 5 to 9 1/4. North Central cash cattle markets is down with a snowstorm in Nebraska. Cash hogs markets are steady as well. Illinois hogs slaughter is $60. Cash hogs weights is steady as well. This been your commodities markets for this afternoon.
We would recommend, like they have done in the past, farmers take RPO at a high coverage level. Most Illinois farmers in northern and central Illinois take that at 80 and 85%. That would be a good place to be. And then think about ECO on top of that. If they want doing ECO is county level coverage from 90 to 95% down to 86%. And if you're concerned about revenues, that would be a good alternative this year, and just consider it. That's not a firm recommendation, just consider it.
Farmers needs to supplement coverage option to have coverage for the crop insurance. 80 to 85 to recommend that ag economists that farmers to have federal crop insurance.
For corn acres, revenue protection or RP with high coverage levels at 80 or 85% is recommended by the ag economist at the University of Illinois, along with considering the enhanced coverage option or ECO, says Gary Schnitke.
We would recommend that, like they have done in the past, farmers take RP at a high coverage level. Most Illinois farmers in northern and central Illinois take that at 80 and 85%. That would be a good place to be. And then think about ECO on top of that. If they want to, do ECO is county level coverage from 90 to 95% down to 86%. And if you're concerned about lower revenues, that would be a good alternative this year, and just consider it. That's not a firm recommendation, just consider it.
The Farm Doc team
The
also
Farm
analyzed
Doc team
the coverage option or SEO. They wrote in the Farm Doc Daily article this week that because our county is likely to provide higher payments this season, it's probably best to skip SEO in most circumstances. Our county is the recommended choice for corn and soybean base acres due to its higher expected returns compared to PLC. While SEO is an option, historical experience suggests limited payments in Illinois, making our county a more reasonable farm safety net choice. Again, farmers should consider higher crop insurance coverage levels this season at 80 or 85%, possibly pairing it with ECO coverage to 95%. The crop insurance decisions are due within the next few days. The ARC PLC decision is due in mid-April. I'm Illinois Extinction's Todd Gleason.
The Farm Doc team analysis of the additional crop insurance to the farmers in central Illinois. Gary Schnitke is an agricultural economist from the University of Illinois in Urbana-Champaign campus. He analyzes to the reduction of cost of crop insurance by ARC or PLC from the federal crop insurance in the Farm Bill. The ARCO is based on corn and soybean acreage for central Illinois. 80 to 85% pair with ECO with 95% for coverage of the ARC company. Thanks to Todd Gleason from the University of Illinois Extension for providing this audio. I'm talking with Brady Huck from Advanced Trading for today. We were bringing the commodities markets, especially in the technical aspects on the cattle markets. Hey, Brady, how are you today?
I'm doing great, Caesar. Thanks for having me back today. It's we've had quite the day today, though. I woke up without power. Yesterday it was 90 degrees, and today it's a blizzard in Kansas. So it's been an interesting day to say the least. But thanks for having me on your show.
Yeah, you're welcome. Do you have any updates on the grains markets for this afternoon? Could you explain to our audience that what's the fundamental on the grains?
I may have a little technical issue here in what you're saying, Caesar, but grains closed mixed today, had corn up, geese down, Hayseed wheat selling off as well too, and beans a little bit weaker. But cattle had a great day and continue to run higher. Hogs a little weaker as well, though. So, if you want me to talk about fundamentals in your grain markets, we definitely have a story in the corn market for now. The continues to be the number one game in town when it comes to corn. And that's a great thing. Balance sheet's tight. We have strong exports and we've had really solid ethanol production. Got to watch the ethanol stocks number out there and make sure we don't get too crazy with building that stocks higher. We need to keep burning through gasoline and ethanol and then avoid that inventory getting too out of hand on the ethanol side of things. When we look at beans, fundamentals in the bean markets, it's all about South America. They've got a good crop down there, and they're on pace to have a record month of exports down there as that crop comes out of the field. Got a big crop, and that's going to be the number one game in town going forward for anybody in the world looking for beans. So some headwinds in the bean market there, but the corn has a story, at least until we get the safrinha corn crop planted or harvested, and that will be in July timeframe. And we've also got U.S. planting around the corner as well. So here for the short term, next few months, got a definitely big corn story for the U.S. farmers. Keep an eye on prospective plantings at the end of the month and South America weather over the coming weeks.
Do you have any questions about the technical aspects on soybean futures?
Uh, on the fundamental side, to me, that's what's driving the market, and then the technical side of things, charts and watching the chart side of things. I think we got to watch that $10 level. I haven't looked at a chart today, to be all honest with you, because of the blizzard, but I will. I'll dig into some of that here. Fundamentals tend to be leading the story right now, though.
Markets for right now at 270s. How is the cash markets in north of the cash trend? It was down for last week.
Yep, cash has been all over the place, but the Packers shown a little more appetite to buy and chase these fat cattle over the last week. That's been a good thing, getting those bids back above $2. We got records on the feeder cattle index, and feeder cattle futures continue to push higher. So that's it's euphoric and it's bullish until it's not. There's a lot of fundamental story on the supply side of things that are going to support the underlying market, but we've got to watch demand going forward. When will the consumer push back? But the Packer is moving through them and wanting to up the kills, and the cutout's been supportive of bringing, keeping those kills in line. We got a cattle on feed report at the end of the week. Going to be interesting to see what gets printed there, but great values out there in the cattle market. I've been very much encouraging producers to go out and manage risk, LRP, strategies that establish a floor. I love keeping the upside open, and that's why I want to optionize what we're doing with our risk management.
Do you have some concerns about this price is 286 for today on the board?
A nice close here today, and I think I don't want to put a limitation on where this market can go. The funds can add length as long as they want to until they get exhausted. You got to, to me, the fundamental pieces and the outside pieces with the macro market, the stock market, the economy, the health of the consumer, those are going to be the big picture items that really impact producers down the road. And going to be what makes or breaks this thing going forward. We can't predict that big event, and it's bullish until it's not. And I don't want to put a lid on where this market can go, though, Caesar.
Finally, what is your thoughts on the cattle on feeds report?
Yep, big report coming up at the end of the week with the cattle on feed report. Analyst estimates for the report is for placements to be down significantly versus a year ago. But we got to remember that the bar was really high last February. We had significant amount of placements last year, and so we're comparing it to a high base number. But analysts looking for a 10 to 15% drop in placements. One guy calling for a 21% drop in placements versus a year ago. Weather implications, comparing it to that high placements number a year ago, and then the restriction on Mexican feeder cattle imports going to be a factor in that number there. But the marketing's pace a little lighter, down 8 to 9% is what analysts are looking for. The on feed total on feed, looking for that to be down about 2%. We will see what gets printed. The devil's going to be in the detail there. I'm optimistic that we could have maybe a bullish surprise on the placement number. We'll see. We got to keep in mind, wheat pasture cattle are going to be coming off here the month of March, and maybe next month we have a little uptick revision, or the higher placements that come in there and correct that thing. But I'm optimistic we'll have some good numbers there. Again, I go back on the cattle side of things to outside markets. Watch kills from the packer. Watch the cutout. Those are going to be the big driving forces to hopefully sustain the bull rally and the momentum that we've had. But from a producer perspective, opportunities down the road either. So I'm very flexible and nimble with the strategies I'm using to protect the bottom line.
How is the Packers bids for right now?
I haven't heard much here this week. I've been kind of out of the loop the last day or two, but we'll see. We'll see what they print tomorrow. What as that gets established later in the week. But we'll see. I would think that maybe this blizzard could have some impact on kills and some daily slaughter volumes for today and maybe tomorrow, as trucks and travel impacted by the blizzard across the plains, Nebraska, Kansas area, and will we see a little downtick in the slaughter volumes here for today?
Thanks, Brady. You be careful out there.
Will do. Thanks for having me, Caesar. Appreciate it.
This is Brady Hawk from Advanced Trading on today's program. Thanks to Brady Hawk from Advanced Trading. This has been Back Roads of Illinois. I am Caesar Delgado. You have a great day.